Welcome back. Well, oil prices fell this morning as some investors scooped up profits from the recent rally, though solid demand in the United States and a switch to fuel oil from coal and gas amid surging prices capped losses. Brent crude futures lost almost 1% to $84.24 a barrel, while U.S. West Texas Intermediate crude futures for December shed 0.92% to settle at $82.20 a barrel. November WTI, which expired yesterday, settled at 91 cents after touching the highest since October 2014. Earlier in the session, U.S. crude stocks fell by 431,000 barrels in the week to October 15th to 426.5 million barrels. U.S. gasoline stocks fell by more than expected 5.1 million barrels in the week to 217.7 million barrels, the lowest since November 2019. Well, oil markets hit multi-year highs earlier in the week, also supported by a global coal and gas crunch, which has driven a switch to diesel and fuel oil for power generation. But a Chinese government flag on Tuesday, it was looking for ways to tame record high coal prices, and that would ensure that coal mines operate at full capacity to help ease a power shortage. What does all of this mean? Embracing more coal, dealing with the price of coal and the global oil. Well, we have Bolanle Agbaje, analyst with financial derivatives, to have that discussion with us this morning. Good morning, good to see you.
Good morning, good to see you.
Yeah, so a lot of things happening in the oil space, and it just happens like that. One minute the price is up, then the price is down. First is the U.S. stockpiles, then is Chinese trying to work on the price of coal, and then we just see the prices going everywhere.
Yes, so prices are still relatively high. I think they're about a 5-year or 3-year high at the moment. So the reduction in price is not that significant, but we're seeing that, you know, as a result of the Chinese government making sure that they hamper on coal prices because they're heavily reliant on coal for power generation, which would indirectly affect, you know, their growth within the economy. So I think the government is trying to come in and, you know, try to regulate, you know, the increases in coal prices to make it affordable for, you know, most of the manufacturing sector. Also, that apart from the fact that that affected oil prices in a negative way, we also saw, you know, the U.S. stockpiles increase. The American Petroleum Institute reported a 3.3 million barrel surge in U.S. stockpiles, which, you know, reduced prices significantly. But I don't think we'll see that drastic drop in prices if we don't see, you know, OPEC come in to regulate or increase supply within the market.
Do we know what China is doing to reduce the price of coal?
Well, they will just come in and try to offset, you know, the prices when it comes to, you know, the producers of coal. An example of what they can do is, you know, subsidies, for example, like what we're doing in the oil sector within Nigeria. You know, if they introduce subsidies within the coal space, it would more or less reduce the cost for some of the coal manufacturers or the miners, the coal miners. And then, you know, that would translate into lower prices for the final consumers.
And then it's funny that we're talking about increasing the use of coal or otherwise.
Yes,
at the time we're talking about climate change and COP26 and all that.
They did promise that, you know, they would move along, you know, remove themselves from, you know, depending solely on coal. And I also think that it's a strategy to make sure they're not heavily reliant on oil, which is cleaner than coal, and obviously moving towards the more cleaner fossil fuels. I think moving towards the cleaner fossil fuels is expensive at the moment. And, you know, right now, most countries are concerned about, you know, getting their economies to a stable level before, you know, looking to switch drastically to, you know, more cleaner fuels.
And it seems like a challenge, especially when we look at maybe the African countries. South Africa the other day, the minister had to come out emphatically to say they're not ready to transition, you know, to alternative. And the UK, they are trying to, I think they made some money available, you know, for people to switch to alternative and cleaner energy. But does it seem like Africans are ready, the African countries are ready, or we are just going with
I don't think we're ready. Like I mentioned, it's very expensive to switch to cleaner fuels. It has to be affordable for the, you know, poverty is still a major struggle for most African countries. So, you know, to get the poorer economy to move towards cleaner fuel, which is expensive, seems far-fetched. So I think without the government really, tapering down on how to introduce this cleaner source of energy within the country, I don't think it will be easily adapted by, individuals within the economy. I think, and also most of the governments in, African countries are more concerned about increasing economic growth and, reducing, alleviating poverty. The basics first, before, trying to switch to more expensive fuel, even though it's cleaner for.
Okay, but when we measure the need for clean energy, a clean environment, climate change, and then we look at it as what it costs us, not just in money now. What does it do? It depletes some of our resources, but we are still trying, I'm talking of Africa now, still trying to catch up with the need, of the basis. Which one should we embrace first from your perspective now?
Well, from my perspective, it will be the needs first, because, it's what drives long-term growth. If, individuals within the economy cannot have access to clean water, for example, is something we still talk about, that takes major priority compared to, trying to determine whether, cleaner fuel is what should be adopted or not. And also looking at the fact that Nigeria is still heavily dependent on revenue from oil, I don't think it's something, Nigeria, for example, would be thinking about moving from, oil to more clean energy when we can't even get revenue from oil.
Environmentalists will also tell you that we are also losing much, sticking to this.
Yes, but I think because whatever we're losing is not immediate, it's more or less in the long run, and most people cannot see, what we're losing yet. So that's why I think the priority is not really focused on that, because what most people try to concentrate on is what we can actually see right in front of us, and that is poverty. That is lack of access to clean water, education, and all that.
All right, moving away from that, we see that the volume of dollars traded went down by over 28% in the first 8 months of 2021. In August, it was 3.22 billion. But it's now 28. What drove that? What happened?
Well, the fact that, the demand for Forex in the country is significantly high, mostly because, most people are feeling like, although, we've seen the depreciation with the Naira, and it feels like most people think that, keeping their money in dollars would more or less shield them away from, the shocks that they're facing with, the Naira, and also protect their investments, protect their real rate of return. The high inflation environment also doesn't support, the fact that, the Naira keeps depreciating. So I think that's what the CBN is currently facing and trying to work hard, relentlessly hard to, make sure that we protect the Naira, and that comes at a cost of depleting external reserves.
So you do believe, or you do agree with a group of people who say that some of the demand we see on Forex is artificial?
Yes, and it's speculative. Most people are trying to benefit from the drastic changes in the exchange rates that we're seeing at the moment. And then you have others that, believe that keeping their money in Naira is not valuable for them at the moment. So they'd rather keep it in dollars. And, just the way the environment is at the moment, the economy and all of that makes, the situation much, much worse than it already is.
And what's this doing to us? I mean, because you do talk to some manufacturers who are feeling the pinch, and it seems their complaint is genuine.
Yes.
So this is actually...
So it's a dilemma in the sense that, obviously, the manufacturers are complaining about higher costs because we import a lot and all of that. But at the same time, the only solution to the problem is more or less producing more. They can't produce more because, the cost environment is very high, but we definitely need to produce more to make sure that we get positive impact.
How do we break this circle?
How do we, improve this dilemma is where the government actually comes in trying to support, some of these manufacturers with their high cost environment, because by the time they increase productivity, that more or less translates into higher production within the economy, higher GDP, and even, higher exports, which would more or less bring more, dollars into the country, like we,
For you now, what's one major thing that the government can do to reduce that cost of production?
More, there's
so many things.
There's so many things.
A lot of people tell you power is a very...
Power is a major, yes.
Is a very top priority.
It is, because at the moment, we shouldn't, like, in this year, we shouldn't really necessarily still be heavily reliant on generators, for example. In most countries, you don't have that. You know, that is a major impact of or contribution of costs when it comes to, you know, these manufacturers. Power is a major issue. But at the same time, what the government needs to do is make more investment within, you know, the economy, more investments in infrastructure, capital expenditure.
Those are long-term,
Long-term investment. So those are the things that you don't see now. And the government is borrowing heavily to support this. And, you know, there's the risk that the government would actually fall into like a debt trap, because we're already, from January till about May, we had borrowed about 1.8 trillion, which is huge. You know, and they keep borrowing to, you know, offset or, you know, service
the ones we had borrowed.
So it's a terrible situation that, you know, the country is in at the moment.
You know, yesterday we had a conversation on this, something related to this, about borrowing for infrastructure.
Yes.
Can the infrastructure pay back what we're borrowing?
The infrastructure can definitely pay back, but not in the short term. And that's the, you know, the fact about it. It's something that it's an infrastructure. It's a borrowing that has to be paid back, you know, in the longer term. So I don't know. It's a very weird situation for the government at the moment.
Wow, doesn't look very good. And cocoa farmers in Ivory Coast are on strike. That should be good news for Nigeria, isn't it?
It should be, ideally, but we're only producing about 240,000 tons, and it's not really huge. Although cocoa is one of our major exports when it comes to the agri side of things. Although it's great, you know, that these farmers are striking. Well, in Ivory Coast, it's not so good.
Of course.
The fact that, you know, they're demanding, they feel like, you know, you have low retail prices as well as high export taxes, which is not great for them. So they're trying to obviously withhold, you know, some of their cocoa beans and try to affect the prices within the market. But it's great for us. All we have to do is just ramp up our cocoa production. Although, you know, last month, you know, farmers had complained about the black pod disease, which had affected their harvest. And we do hope that that doesn't happen in this new harvest, you know, season. And most of these farmers can also contribute to the production that we're seeing at the moment. Although, you know, the industry is flagged with so many issues, lack of investment, you know, poor understanding of how to actually grow cocoa farms, and also the fact that, you know, they need huge investments. And obviously you don't see the impact of the investment so soon. It takes about 2 to 5 years to grow a cocoa tree. So it's not a short-term investment at the same time.
You know, sometimes when we read about these things, you just ask yourself, Nigeria has the potential to do this. Nigeria is the third, has the potential to be the biggest cocoa, palm oil, and things like that. And it just seems like we are not are we being intentional enough? I mean, it doesn't have to be the government. You know, can't we have private sector, for instance, focus and say, we're going to deal with cocoa, and then we follow not just the planting and the harvesting, but the value chain. You know, we can make something out. We can have a little factory. We have a lot of rich people in Nigeria.
We do. But, you know, the private sector would only invest if they can actually see the real returns from it. And the fact that, you know, it benefits them significantly, and there's no, you know, situation where the government will come in with any policy uncertainty that would actually affect, you know, their investment. So that's what they're worried about. The same way, you know, investment from abroad, you know, some of them are not so sure about the investment space within Nigeria at the moment, and so they're withholding their dollars. So, you know, most of these private sector officials are not, you know, convinced that, you know, their money is safe enough to invest, and, you know, the fact that they will see the long run returns from this investment.
So it's still back to the government.
It's still back to the government.
And that's going to be our second conversation, the fact about, you know, making the business environment friendly enough for people to have the confidence and conducive.
So you're talking about cocoa processing plants and all of that. That takes huge investment. We're still having power issues. You know, that would obviously triple. Yes, it would obviously triple the amount of, you know, investment that one has to actually put into the business. So it's not as easy as one thinks.
Wow, these are the realities that we have to live with. And then we see that still in the commodities space, Uganda, their coffee exports rose by 21 to 27.
So about 5 years ago, Uganda, you know, made sure that by this time they would be planting about 300 million coffee trees a year, and that's exactly what they're doing.
That's
at the
being
moment.
intentional.
That's being intentional, and we can actually see the result of this intention that they had 5 years ago. So obviously, the result of that is Uganda being the largest producer of coffee within Africa, and also the 5th largest in the world. They're doing things right. All I can say about this is we have to. It's another example that we can learn from. They're not so worried about the short-term benefits. They put a goal to this and made sure that they're seeing the results. And I think the fact that they want to be comparative, they want to build a comparative advantage when it comes to the production of coffee. The likes of Nestle and all that will be importing, these raw materials from, and Nestle also reported higher earnings, contributing to the fact that, from staying at home, the lockdown, they believe that more people were drinking more coffee, and that contributed to, increases in profits with their companies. So, but imagine if we actually produce the coffee within Nigeria, it would even triple the profits.
And we do have the potential.
We do have the potential.
Well, what else is happening in the commodity space?
Well, commodity prices are still high. They remain elevated, and I think that trend is going to continue towards the December period. Most people don't have a choice than to, purchase some of these commodities because it's actually a necessity. Some of these commodities also don't even have substitutes, So we still expect to see the trend of, major staples remain elevated.
Elevated. All right. Thank you so much, Bolanle, for sharing your thoughts with us. We do appreciate it.
Thank you.
So we'll take a break now. When we come back, well, like we've hinted, how easy or difficult is it to do business in Nigeria? Why are the private sector not going to the agriculture sector to boost production? Well, we'll talk about that and much, much more after the break. Do stay with us.